Yeah, good evening, everyone. We'll be starting in another 1 or 2 minutes. So, welcome to monthly market outlook presentation. Uh, as you know, we cover 360-degree view on the market from perspective of fundamental, technical, and derivative. So, once again, for this April series, the outlook is being presented by all the teams. First, we will be starting with fundamental and then will be followed by technical and derivatives. We will also be presenting few stocks from different angles like fundamental, technical, and some strategy from derivative, along with the view on the market. So to start with the outlook from the fundamental side is that during the last month we had seen the banking crisis in US and Europe. US it was more of a smaller banks and Europe large banks. But that crisis was handled by Fed and in US also it was specific to one bank. Other banks are comparatively quite strong from capital and liquidity point of view. So the crisis got somehow controlled and was neglected by the market in the second half. And we had seen some bounce back in those market as well. The smaller bank in US continued to struggle. Yesterday also we saw one of the bank decline by around 25%. But market is now neglecting those developments and is looking at broader pictures, wherein the Fed will come whenever there is a crisis, and that will support the banking system, and it will not be converted into any systemic risk for that economy. So that is uh, what has been contained, and that's why the market had seen some bounce back. And overall, if we see for the month, market in those countries are more of a flattish in last 1 month. Uh, so Thereafter, what we are seeing that though the global financial crisis is not expected, but there is a concern which has emerged that there, because of these restrictive behavior of the banks, there could be some deeper corrections or deeper slowdown which can come into those countries, and recession can come faster and a bit more deeper in those countries, which is what is getting reflected into the expected Fed fund rate. So Fed in the last meeting has indicated that they may be cutting one more rate of around 25 basis point, and thereafter in the current in the year calendar year 23, the rates will continue to remain high, and we may see decline from CY 24. But what the CMI Fed Watch tool indicate that the rate cut may be coming sooner, and rate cut can come in even September also. The probability of rate cut in September is at around 55%. This is mainly because the market is expecting that the downturn could be faster, and the Fed might have to cut the rate to bring to restrict the deeper recessions. So there is a contradictory view which is emerging in the market, and market is predicting that way uh, in the international market. So that indicate that though there could be some hard lending in the near term, but immediately thereafter there could be some corrections as well. Anyhow, what we see that those markets are in declining zone since last almost around 1.5 year. So the correction mode is already well priced in, and a lot of the negativeness is already there in the prices, which is indicating that there is a price correction also and the time correction also. So quite possible, lot of negative news from the international side has already been factored in. If we talk about India, RBI has indicated that there could be 25 bips price increase, interest rate increase expected in the meeting, which is on the 6th. They will be announcing the rate, the policy decision. But what is more concerning was that in last 2 months, the short-term rate moved up very fast and remained high, and that has impacted a lot of short-term borrowing by the banks. In fact, the CD rate wherein bank borrow with each other went up to as high as 7.68, 7.7 like that. So that was quite alarming, and even call rate also went over sometime also even 8%. So that was a bit concerning, and that was even putting up a lot of pressure on the banking stock as well. But what we see that this is there is a year-end phenomena wherein a lot of banks borrow in that market to correct their balance sheet or improve the lending also. But going forward, as the year has ended today, this pressure of year-end borrowing will reduce, and there will be easy supply of money. Apart from that, RBI, while coming out with the borrowing program for the next year, in the Q1, the short-term borrowing, they had kept it very low, much lesser than the last year. the short-term borrowing, that is through treasury bill, in the Q1 FY24 will be around 1.42 trillion at borrowing, whereas the same figure was 2.40 trillion in the last year first quarter. So that indicate that RBI will be uh, more supportive in respect of the supporting the liquidity into the system. So that will help to reduce this short-term lending rate, and we will see positive side of that in the borrowing rate as well. And somehow, if suppose RBI give indication that the interest rate is likely to peak out at this level and come up with some program of when they can reduce, so that can also support the interest rates or at least to the banking stock in that perspective. So this is what positive development which can happen from here. And apart from that, if we see there is a lot of reduction in the commodity prices, specifically energy prices and shipping freight rate cost. We had seen a substantial decline in coal and gas prices in last 3 months. And also a lot of reduction has happened in various other commodities in last 3 months. So all these are likely to have some benefit on the cost side, wherein raw material cost can come down, or power cost can come down, or even freight cost can come down. So there could be some expansion in the gross margin, and there could be a good expansion in the interest in the EBITDA margin or operating profit margins for different sectors and companies. So what we see that the sectors which are likely to see benefit of this are FMCG, pharma, chemical, cement, and metal, wherein the Q4 result will see some sort of expansion in the margin. And we may see Q on Q, that is specifically Q3 to Q4, there is improvement in these margins. Though volume continue to remain a concern, and sales growth, we may not see any great positiveness on that side. But that was the scene even in the last quarter. So volume and sales wise, we may remain a bit subdued, but there is a positiveness on the margin expansion side expected in this quarter. And if suppose this short-term interest rate comes off, then the banking stock can also see some positive trend. So that these two things can support the market in near term. Since last 2-3 months, we were a bit cautious on the market and were indicating a bit caution. But right now, what we feel that that cautiousness is behind. Though index level, we may not see any great move in the near term. Uh, Maybe the range could be Nifty for range could be 16,900 to 17,600 or 700 level. But we will see good bounce back in mid cap and small cap stock in these quarterly results. This is mainly because we had seen quite a bit corrections in these stocks, and if suppose we see some margin expansion, the stock will start forming. So outlook from here bit looks positive. We are looking with a positive bias now, and Nifty range could be 16,900 to 17,600 or 700 levels for the April sales. So that's all from me. Now I'll request Jihan to take up from here.
Good evening. So the first stock from the fundamental side is Elecon Engineering. We have been tracking this company since a year, and it's a manufacturer of industrial gears, where 90% of revenues comes from this segment, and material handling equipment forms 10% of the sales. It is a play on industrial capex across various sectors, especially cement, steel, power, sugar, paper, chemicals, and various other sectors. And the company is a leader in the industrial gears with market share of 35%. There is another company which makes these kind of gears is Shanti Gears. And although it focuses more on the auto side also, and Elecon focuses more on the industrial side. Uh, Strong industrial capex is likely to drive the utilization higher, which is driving expansion in margins. We think that solid demand from steel and cement sectors, which form around 30% of Elecon sales, will drive the top line growth for the company. After a decade of struggling in the EPC side of the business, finally company has decided that within the MHE segment, they will stop taking incremental EPC projects and focus more on the product side as well as the after sales service side. So this is driving a turnaround in the margin front on the MHE segment. Companies offering strong growth visibility, and we expect revenue and profits to grow at 18% CAGR in FY24 and 25. And this will be driven by robust demand environment in the engineering industry that we are seeing. And also this will result in expansion in ROC. Company has been reducing its debt, and ROC will accordingly expand from 17% last year to 29% in FY25. We arrive at a target of 520 rupees, valuing the company at 18 times, which is similar to its growth rate at a PEG of 1 time. And also, if we look at other mid-cap companies, which are trading at similar kind of valuations at 18 times. So this gives us a target of 520 and the upside of 36%. Thank you. I will now invite Priyanka to take the call forward.
Good evening. The second stock is Vishnu Chemicals Limited. It is one of the leading player in the industry of chromium chemicals and barium compounds across the world, and it is the only player in India as well as in Southeast Asia, which is existing in the chromium-based chemicals. The key product of chromium chemicals is the sodium dichromate that they are manufacturing, and it has an application in industries such as pharma, leather, and dyes and pigments. Currently, it is serving more than 100 customers across 12 plus user application industries and 50 plus countries globally. It has 4 manufacturing units, and the overall chromium chemicals capacity is at 80,000 metric tons per annum, which contributes 85% of their revenue. And they are also dealing in barium compounds, where the installed capacity is at 60,000 metric tons per annum, which contributes 15% of the company's revenue. Now they have done the backward integration in FY22, which is expected to help them to improve their profitability. However, we are cautious on the soda ash prices. If it remains stable or rising, it is beneficial for the company. Further, the company's focus on innovation to strengthen its product mix will drive the business growth over the long term. It has generated revenue growth of 13.6% between FY18 to 22, which was led by addition of chromium derivative products in 2019. So during 2019, to reduce the product concentration risk from sodium dichromate and another key product, they had introduced new products, 4 new products, and it expanded their industry base to more than 15 industries, including master batches, refractories, wood preservatives, paper, and pulp. This has augured well to improve the average capacity utilization from 60% in FY16 to 18 to 80% in 19 to 22. Overall operating margins also improved by 235 basis points, while PAT grew by 54% CAGR between FY18 to 22. it maintains debt to equity ratio of 0.9 times as on September 22 with a total debt of 350 crore, and it aims to achieve the debt equity ratio of 0.6 times or lower than that within a year. Also, whatever the upcoming capex that they are planning is expected to be funded through internal accruals. The next slide. So the company's capacity expansion and its efforts on bringing operational efficiencies are the key growth drivers for its business. During Q3 FY23, the company has completed debottlenecking at its existing plant that has increased its chromium chemical capacity from 70,000 metric tons to 80,000, which is expected to see the benefits in FY24. Also, it has planned further expansion of 20,000 metric tons per annum, which is expected to be commissioned in FY25. The capex requirement for this project will be rupees 100 crore. Also in barium vertical, it is launching a new product that is precipitated barium sulfate, for which the capacity is planned at 30,000 metric tons per annum, and it is expected to be commissioned in FY25. This product has a high margin profile among its existing products. The management also look forward for the further opportunities of cost savings and getting operational efficiencies to drive the margin expansion. In Q3 FY23, VCL's top line performance was below expectations. It was degrew by 12% QOQ. Which was mainly impacted due to its planned shutdown in manufacturing facilities due to its maintenance. Currently, the stock is trading at a PE of 9.9 times to EV by 9.9 times to PE and 7.3 times to EV by EBITDA to FY24 estimates. We expect the company to deliver the strong and steady performance over the long term, with the revenue growth at 22% CAGR and PAT growth of 42% over FY22 to 24. We value the stock at 13 times to FY24 EPS and arrived at a target of rupees 358 per share with an upside of 31% over the current market price. Thank you.
Yes, thank you, Priyanka. This is Swati. Good evening, all of you. This March month, we have seen that the Nifty has been corrected up to 16,800 levels, and even I have mentioned it on the chart also. Just check out on the right-hand side that the Nifty is trading in the downward sloping channel, and then it has tested the lower trend line of the channel, which gives some sort of a cautious sign. In the month of the March, we have seen that the Nifty has given a cluster breakdown of a cluster supports it around 17,200 towards 16,830, but somehow it's manages to maintain that support level 16,800 level and shown a very good kind of a bounce back rally within a week, at such almost up by 2.5% on the closing basis. Now going ahead, as we can see on the chart that the Nifty is trading in a downward sloping trend line, but probably if this trend is likely to be continued, Nifty might test the upper trend line, which comes to at around 17,700 to 17,800 levels. So on an immediate technical ground, Nifty has a support at around 17,200 level. 17,100 will act as a very strong support level as long as it sustains that level. Upside rally can be extended towards 17,600 to 17,700. The only concern is that since we have Nifty is currently trading near, it's exactly near the resistance level of 17,400. If it surpasses that level on the closing basis, then definitely more upside can be witnessed towards 17,700. The overall view will be cautious as long as Nifty trades within that channel, but the pullback rally cannot be denied after such a fall. So market means we are advising the clients to remain stock specific and stay light with the major long positions. Now coming towards the Bank Nifty today had shown a very strong pullback rally with the gap up opening, and the strength has remained intact during a day itself, which gives a very strong sign. Now going ahead, immediately the support is sliced at 40,400. If it's break that level on the closing basis, then we again likely to witness selling pressure or say the profit booking towards 39,900, 39,500. Why I'm giving the cautious view or say the support level first, and because Nifty has already shown a very good kind of a pullback rally, and now it is trading at a resistance level of 40,004 at the higher levels, because it is just trading nearby its average resistance. Now, as of now, 41,000 will act as a crucial support level. Any move above that level, we are likely to witness the positive momentum, which might take a bank nifty towards 41,400 to 41,800 levels. So the view on both the indices will remain a cautious. Pullbacks rally cannot be denied. As such, we have witnessed a sharp downfall into the market. So trade this pullbacks rally, but with the strict stop losses. Now, next slide, please. For this month, we are recommending two buy calls. First one is a Petronet. This why I'm initiating a Petronet buy call. You can just check out on the chart that it's a quarterly chart. On larger degree, it's showing a breakout level. It's not yet breakout, but I'm preempting that this particular counter will give the breakout in the near term. As such, from the last 2 to 3 trading session, or else we can say from the last 2 quarters, the stock is really doing very well on the price and on the volume basis. The daily chart is also well placed above all the important moving averages, which gives a very positive sign on the technical front. RSI is showing a positive crossover. So we believe that if the stock surpasses 234, 235 level on the closing basis, then it will touch the fit of 270 and the higher side. So we are just giving a buy call at the current market price. If we are getting any dip towards 220, one can add on for target of 270 and maintain the strict stop loss of 210. Second buy call we have initiated is on Godrej Consumer Product. Next slide, please. Yes, Godrej Consumer Product. In this particular stock also, the same pattern has been found out on the technical front. If you look towards on the monthly chart also, we have indicated that the stock has given the breakout of the trend line, which gives a very positive sign. And from the last 2 months, almost the stock is trending in the higher tops, higher bottom formations, which gives a very positive sign. Daily chart also indicates that it's well placed above all the important moving average. If you look towards the daily chart, the stock has given the breakout of a flat pattern, and which shows the potential up more in the near term. RSI, you can see on the chart itself, is showing a positive crossovers, which gives us strong indications of the strength, as well as the stock will move on a higher side. So one can take a buy call in Godrej Consumer Product at current market price at around 966. If you're getting any dips towards to 940, one should add on. We are looking for a target of 1070 also on a high side, and maintain the strict stop loss of a 925. So that's it from my end. I request Nirav to take a call forward.
Yeah, thank you, Swati. On the derivative front, looking at the overall open interest of Nifty and the rollovers that have happened, it gives a good feeling that the reversal is in place, because all in all, Bank Nifty has seen a huge amount of open interest built up, and lot of shorts were built in. So there is a likelihood of a short covering rally coming soon that we have seen today already, and it should continue because there are so many shorts. After a point, it comes that you cannot add more positions. You have to liquidate positions or cover positions, and that is what is happening. So we are seeing some covering coming in, and this should continue further. Moving forward, Nifty can go towards that resistance area of 17,500 to 18,000 band, which is a strong resistance zone, but most likely it should touch this level in the first half of April. Bank Nifty and market-wide rollovers have been much higher than expectation. Also, Nifty, in terms of open interest, is opening the series with much higher open interest, which also indicates, the reversal is in place, because there are shorts in the system we should cover. Looking at the options open interest in terms of Nifty, the calls and puts, you're seeing a good base formation around the 17,000 strike. Good amount of open interest built up, even though there was expiry on Wednesday. You didn't see much positions, going out. So there is a good base at 17,000 strike, and you will see good buying coming in whenever Nifty comes towards these levels on the downside. So look out for the same. The PCR is was much lower, at the end of Wednesday. It is still at comfortable levels, and VIX also, it has come down very drastically today as well, and it continued to remain below the 15 level. So what has really happened was, when Nifty went down, the VIX should have gone up, it should have shot up, but it did not go up, and there was a clear divergence seen in the VIX, and that is how we believe this bounce should come in, and it should be a good bounce for Nifty, and most of the stocks should participate in this bounce. However, some of the stocks will definitely witness some selling pressure because of very high open interest. The index at this point of time looks like a good base formation at 17,000 to 16,500. So whenever this level comes, it's a level to buy, while the resistances are placed around 17,500, 18,000 levels. Coming to the stocks, I believe Maruti, SRF, Bharti, Exide, TVS Motors, and many of the auto names, even Tata Motors, has witnessed good amount of covering. I believe at this point of time, most of these stocks should witness a good bounce. The auto as a whole seems to be, in this buying zone, and it should bounce as a whole. The sector looks good. Also, looking at the other stocks which can witness some amount of selling, where open interest is quite high, or they are seeing reversing, long position being cut, are Vedanta, Marico, Grasim, M&M, AU Bank, and Rain Industries. So these stocks, basically, most of them have high open interest, where lots of longs were built in, but there has come a point where they will have to cover positions and liquidate positions, and because of which you will see some more selling coming in these stocks whenever market takes a break from this bounce. So whenever there is a U-turn or some selling pressure in the index, you will see these stocks coming down. That is when you look to sell these stocks. Now coming on to the strategy. For this month, we have given a bull call spread in Nifty for this month, where you can buy the 17,400 call of the weekly expiry of 13th April, and sell the 17,800 call of the same expiry. The overall outflow is around 120 points, but because we expect a bounce coming in, and that bounce can probably move up toward that 17,800 to 18,000 levels, we believe this strategy will make good profits once that bounce comes in. The maximum loss is also 120 points, so that is also your stop loss, and 280 points is the maximum points that you can get. But once that bounce comes up to 17,800 levels, you can book profits once Nifty comes there. Overall, I believe this strategy should make good gains in the next couple of days once that bounce comes in the next week. Um, Now moving on to the stock specific strategy, and that strategy is on Tata Motors. As I said, auto should do quite well. Auto should most likely witness some good buying going forward, and in Tata Motors you're seeing a lot of shorts being covered, and it is very light on open interest for this month, which is a very good thing, because it has not been light on open interest at the start of expiry for the last quite some time. And from now, there is a good likelihood of a bounce for this stock. The stock can move up towards that 450, 470 odd level. So look to buy the Tata Motors 420 call, 27th April expiry, and sell the Tata Motors 27th April expiry 450 call. So you are getting an outflow of 10 points, and that is also your maximum loss. Your target would be 20 points. So is exactly 1:2 ratio being witnessed here. You can still keep a stop loss of around 4. Those who are who want to keep a stop loss can keep that stop loss of 4. Now the target would be around 20 points only, because we believe there is a bounce which is in the offing in Tata Motor. It can go much above that 450 odd levels at expiry. So yeah, that is it from our side. I'd like to ask Sunil sir to take over, please.
Yeah. So now I'll request you people to put up your questions in Q&A box. I will be answering the questions uh, as it comes. So there is a question on Vedanta outlook for April series. I think
Yes, sir,
Neerav
I'll
has
take it.
already talked about it. You just explain it again.
Okay, so yeah. So, see, what has happened is Vedanta for this series has witnessed a lot of open interest built up, and on the negative side, because of this dividend, lot of longs were being built in, and after a point, it comes to a point where you have to exit these long positions, and that point has come for Vedanta. So, most likely, this stock is going to come down. Even today, we had given a Vedanta put option, a positional call, which did good profits. We had given it around 8 odd rupees, and it went above 12 and a half, 13 rupees, the 270 put. But we believe Vedanta will fall further. It can probably come down towards that 230 to 225 odd levels. And this series, at least the first half, is likely to be a little bad for this stock. Also, technically, it's a lower top, lower bottom formation. So most likely this stock will come down further. So both of them are indicating negative bias. So look to sell this stock. You can keep a stop loss of around 300, and around that 230, 235 is where you can book profits.
Yeah, there is a question on Associated Alcohol. It's a small cap stock and mainly into country liquor and IMFL. So what is happening that the ENA price, which is the key raw material prices, has moved up very sharply, and that has created some problem for most of these companies. They may get some price increase from 1st April in MP, which is their key market, and second market is Kerala. But what we see that there are 2, 3 issues. One is they are merging their group company, which is into um, similar type of business, but may have some issues related to that. And also the high ENA prices. So as such, doesn't we feel this may not be a great opportunity. And also they are expanding their ethanol capacity, wherein the raw materials are a bit costlier right now, like corn or maybe rice, broken rice. So their prices are more comparatively higher. So that is also not generating great returns at current point of time. We prefer more of a Globus spirit as compared to Associated Alcohol, which can be looked at current prices, mainly because of though there again the issue related to raw material prices, that is broken rice is there, and the prices which moved up in the last quarter continue to remain high in this quarter. But what has happened that from 1st April, they had got price increase in Rajasthan, wherein almost around 80-85% of their country liquor sales come from there. Ethanol, they got some price increase in November, but not sufficient to support the increase in the rice prices. But the another benefit which is likely to happen is that their power and fuel cost is likely to come off in this quarter and in the fourth quarter and also in the first quarter. So that will improve the margins. So overall, what we see that the outlook from the perspective of Q1 result will be very good. No doubt Q4 will be better than Q3, but the major gain will be seen in Q4, Q1 FY24. So, and company has done good capex in past, and still the benefit of the same is yet to come into the P&L. So, Globus Spirit looks much better and positive. Both have corrected in the recent past, but we like that stock more.
There is a question on IndusInd Bank and Poonawalla Fincorp. We are positive on IndusInd Bank. If you see last quarter, the bank ROA has touched 1.9% also, but still the re-rating has slowed down and stock appears cheap. But the reason is that the performance on asset quality on the CV side and MFI side has been disappointing since last few quarters. Bank had told in their Q3 call that MFI performance in Q4 will also be slightly bad because of certain eastern states which are not performing well. But despite of this, the slippage ratio has been coming down. Last quarter it came down to 2.1%, which is quite comfortable and in line with other large banks also. So we think eventually market will recognize that situation is improving in MFI and also CV upcycle continues to remain robust. So eventually we think market will recognize and re-rate the stock upwards. And on Poonawalla Fincorp, recently they sold their housing finance subsidiary. After that, the auto and SME lending book ROA further has increased because that is a higher margin business. And growth they are guiding is that around 30-35% kind of loan growth going forward. Although stock optically appears cheap at 3 times FY24 valuation, it appears kind of fully valued. But looking at the growth, we think that it can be a good, decent compounding stock and probably can double in less than 3 years' time.
Sir, I take IEX and Poonawalla and technical side. IEX looks weak at current level. I already broke that important support zone, that is 136, and trading below that important support zone. So at this level, don't try to buy at current level. Wait for upside resistance level, that is 136. Below that, next important support level comes around 122, 120 at downside. So those who want to buy, they can wait for 136. Second, Poonawalla looks positive in technical. We saw that today's session also and last week also in upside positively, and next immediate resistance place around 320 in technical level, and important support place around 270 at downside. So those those have position, they can keep stop loss 270. Next intraday intraday's importance resistance around 298 300, and above that level 320 is the next immediate target for Poonawalla.
Yeah, there is a question related to the outlook on pharma sector. So outlook seems quite positive right now, mainly because the raw material cost, that is specifically the API prices and even the intermediate prices which they consume has come off and has declined. Whereas the prices of the final doses generally doesn't come down in that proportion, and we will see some good margin expansion possible. even these companies who are selling into the US market also can gain, because the correction their prices are happening in the US, but the decline in the raw material cost can be faster, so that can help pharma company in the coming period. The uh, company like Zydus Life looks positive. One can look at this stock, and Alchem, which is more of a domestic play, also looks positive. So one can look at these stocks in the with a long-term perspective. Yeah, there is a question on outlook for Vodafone. So we are seeing consistently they are losing the customers. Their subscribers numbers are coming down consistently, and which will reduce their revenue potential also, and also uh, the losses which they are incurring will continue to increase. What we are getting feeling from the market that the incumbent player like Reliance Jio and Bharti are not looking at any great price increase also. The only caveat Vodafone can remain floated and can do well is when the prices of prices of their ARPU increases. But that seems these incumbent player like Reliance Jio and Bharti are not considering at current point of time, and looking more at value-added services and 5G, wherein they can increase the realization. So this will continue to hang on the Vodafone. So it's better to avoid or reduce the positions in Vodafone Idea. So there is a technical outlook is asked about ITC if someone can take.
Yes, sir, I'll cover ITC. So ITC has shown a consolidation in recent days and is well placed above all its moving averages. Once it gives a breakout about 385, we can expect a 395 to 405 levels in the short term days. And once a 395 level is broken and it is sustained, then we may witness a big rally in ITC. Then there's one more question on TCS. I'll take that. So TCS has shown a good bounce back in today's session, and it can go up to 30 to 50 levels in the coming days, and that is going to be a very big resistance for TCS because it's a 200-day moving average. 132.50 is broken on its closing basis, then it can range up to 33.50 to 3400 levels.
Yeah, there is a question. Continue.
There is a question on Indian Overseas Bank. So performance of the bank is slowly and steadily improving. Nothing extraordinary. On ROA terms, they have reached 0.7%, which is pretty much where most of the average PSU banks are. And even on the net NPA side, it's come down to 2.4%. Gross NPA still remains at 8.2. But overall, if you look at valuation, then that is at 1.7 times trailing price to book, which seems to be on the higher side, considering that we have better quality banks like Bank of Baroda and even SBI trading at much cheaper valuation. So one can avoid this stock, or in fact switch from IOB to other banks like Bank of Baroda or SBI.
Also, taking Tata Steel and Axis Bank. Tata Steel right now trading the important support zone. We saw that last few trading session is trading 110 range, and upside immediate resistance place 110. About that, then we expect further rally. Otherwise, it's trading in downward trend line. Weekly chart also show the downward, but next immediate support place 100. Below 100, it will come down towards 96, 95 level. But we saw that last few trading session is trading within the range. Axis Bank also looks positive at current level. We saw that Axis Bank last few trading session is trading the bounce bounce back, and we saw the important level in upside. Axis Bank, ICICI Bank, both bank looks positive at current level. Next immediate support place around Axis Bank is 850 and 840 at downside. Upside, next immediate target 890 and 900 in upside for Axis Bank. So those have position, they can keep a stop loss 840 at downside, and the upside target is 890 and 900 in upside. So those have position, they can hold it, and the next target is a 900 for Axis Bank.
So I will take a question on the RT industry. This particular stock is just showing a bounce back rally from the last two trading sessions, and we believe it's likely to be continued towards 535 to 540 levels. So those who are having any long positions, they can hold out but maintain the strict stop loss of 500 levels on a downside. Another query is on the Indian pesticides, that is IPL. Currently, the stock is not in a positive trend as such, but it is trading in a sideways manner. Any breakout of 215 levels only will witness some positive momentum rally on the higher sides, whereas on downside, as of now, it has just formed the cluster support nearby 197. Fresh long positions are not recommended at the current levels, but those who are, if anyone is having the fresh long, they can maintain with a stop loss of 197s. Upside, I believe the pullback rally can be witnessed up to 225 levels. So one can hold on with the mentioned stop loss. Thank you.
Yeah, someone has asked about outlook on cement sector. The outlook is more of a neutral in the sense that we will see around 150 200 rupees increase in EBITDA per ton in this quarter, considering that there is a very sharp dip in the previous quarter in the EBITDA per ton. These EBITDA per ton will continue to be lower than the last year levels, and company need to increase prices to gain any major share in that. Uh, but the prices increase, our companies are not able to take in the last months. There are expectations that the April they may increase the prices. Which is a bit driving the stock in near term. But what we see that they need to take very large price increase to justify these valuations, and there are only 3 months in these busy seasons, and thereafter the rainfall will come, and quite possible that in that period they may not be able to take any great price increases. So there is a window of 2 3 months wherein there could be price increase, but we had seen in the past that any larger price increase result into decline in the volumes, and the pressure comes on manufacturer to reduce the prices again. So overall seems outlook neutral, though in short term, quite possible that this stock can perform in expectation of some price increases. So in that perspective, we see that there is a good opportunity in short term from Dalmia Bharat, which looks comparatively positive.
Sir, I'm taking last two question. That is DLF and Bank Nifty range. First, take a DLF. DLF trading at below the important support zone, that is around 370. Last 3 to 2 week, we saw that is taking a resistance at 370, 380 in upside. And next immediate support place around 348, 345 at downside. But above the 370 is a immediate resistance for DLF. Above that, then we expect further rally. Otherwise, it's trading the below the important levels. And next immediate support place 345. Bank Nifty, Swati already discussed, but we both index in Nifty and Bank Nifty looks positive. Bank Nifty, the April series range comes around 41,500 in upside, and downside 40,000 first immediate support, and below that 39,700 next support zone for Bank Nifty to be coming April series, the 41,500, and downside 39,700 is a major range for Bank Nifty for April series.
Jan, if you can talk about Federal Bank.
Yeah, it's a very stable bank, and performance has been good all throughout even during the COVID times. The bank had one of the best asset quality performances, and in recent quarters, the net interest margin improvement has been as per the management's guidance, and that has happened after a long time. After many years, they have been promising, but finally they seem to have been delivering. And even on the loan growth side, it was at close to 19%, which among mid-cap banks, this this seems to be pretty good. And so overall view is positive. In terms of price to book re-rating, there is not much scope. At around 1.3 times forward price to book, we think scope is limited. Maybe 1.5, 1.6 is possible, but beyond that, it seems to be more of a compounding kind of stock at 18 to 20% kind of compounding stock.
Sir, I take a Tata Power. See, technically, we saw that sharp decline in Tata Power last 3 to 4 trading session. But right now, trading the immediate support around 188, 190, and today's close above the important support level. Do we expect some bounce back towards 200 and 204 in upside? But keep a stop loss 185. Below 185, then it will break the important weekly breakdown. Then we saw the major sell off after 185. But in technical basis, we expect some bounce back in Tata Power towards 202 and 200 next immediate target.
So about IRCTC, though the business model now is more of a stable, but the valuation seems at a bit on the higher side at around 42 times FY24 earnings. The growth will be more driven by the increasing passengers ticketing, which is stable, not likely to show any great growth of around 2, 3, 4%. So as such, the growth against the growth, the valuation seems a bit costlier. So recommend to reduce the position or avoid the stock.
Sir, I take a Kotak Bank. We already given last Wednesday in Kotak Bank buy call, and we expect the technically pullback rally in Kotak Bank towards 1780 and 1800 in upside target, and maintain a stop loss around downside 1690, 1680. So technically, we expect positive in Kotak Bank.
Yeah, there is a question on Bandhan Bank. So this is one bank, which has consistently disappointed since last many years, since last 4-5 years. If you see optically, ROA etc. looks decent, but whenever there is even a small macro event then because almost 70% of the portfolio is coming from microfinance, and that too in the vulnerable regions of Assam and West Bengal. The bank has suffered a lot. Even in the last cycle, this bank had one of the highest write-offs that were taking place, and even until recent quarters, performance continued to remain bad. Even despite that, most of the other MFI players were back on track since last couple of quarters. but this bank was still struggling. And it is not that the bank is also available very cheap that it becomes a value play, etc. So still valuation is at about 2 times price to book. So we prefer that there are many better options to participate in the banking side or on the microfinance side.
Oh, I think that's all from our side. If you have any further questions, you can write to us at research research@nirmalbang.com. We will try to answer your queries on that mail. Thank you very much and have a good weekend.